Hi there. In this video, we're going to look into gold, silver, uranium, SP, as well as TLT. These are education content only, not financial advice. So let's start with the daily chart of gold. Gold is currently down by around 2.5%, give and take. So after the price rebounding from the indicated date that we talked about around May 8th, that is short slightly past the resistance line of 4,658. Gold then, since then, traded sideways for a few days, and I just drawn a channel box over here to measure if gold is really coming into a downtrend. Reason being, today it just broke the uptrend support line that started right over here around end of March. So if this is the case, if the price doesn't recover back to above the support line in the next day or two, then this downtrend may continue, and when it gets back to retest the 4,400, this orange key level over here, it can continue to trade along the channel up to that point. But even if it stays above the key level, it is still owing us a decision. And when we get closer and closer to the 4th of June, that change or continuation determination or the signal will come. What's the change? So assuming the case is it is going for a downtrend, the change is that it is going to break the ceiling of the downtrend, meaning it is not going further south, but instead it may go sideways or come up to retest the upper boundary of 4,900, which this time it failed to test, okay? The continuation means it is going to break the 4,400 level, and it doesn't mean it immediately goes to test the 4,000, okay? There is this uptrend support line over here. This uptrend is the medium-term uptrend that started back in here, March 2024. Okay, so you see there are multiple supports over here. It's not immediate to the downside. All right, so it's still too early if I cover the other key support areas, but this is worth mentioning. The range between 3,200 to 3,500, that's a band that a lot of change of hands happened back in 2025, April to August. So if the case that this price really breaks the medium term, or even you can call it long term, okay, because it started very early in 2024, it's over 2 years now, the long term support, then we can further look into how far or whether this is getting more likely, getting to the mid 3,000 band. All right, so another picture for gold. We talked about this before. If we just look at gold with that price, we never know, how crazy or how normal the price is compared to history, right? So we come back to this chart where the gold price is divided by US M2. Okay, when you look at this, gold has returned to the overprint level. Okay, this was 2011's peak, and gold is currently back to that. So prior to that, only 2 occasions back in the 70s and early 80s, gold has surpassed that level. So it is still a bit high compared to history with the M2 as a base. So whether or not it is going to come back, especially if U.S. interest rates is going to drop, as some forecasts said later in the year, we don't know for sure yet. It all depends on how all the depression and stagflation worry is, or how those evolves. Okay, so that's where the position of gold is. It is still right at this elevated level compared to history. Okay, then silver. We can look at the daily chart first, and silver has also broken this line over here. So we said when you get closer to mid-May, around the 13th, there's a decision to come whether the uptrend is going to continue or is it going to break this medium-term downtrend that started back in early February. And silver did break outside of the downtrend and establish this 6-day run, now returning to the downtrend area. Okay, it hasn't, the price, this big candlestick today, hasn't fallen through this support line yet, okay, this short-term uptrend. So the next few days is going to be very key. And every single day there is like a cross over here. This is just on the 20th. So in a few days, if the price trade along this wedge over here, it has to come with the change or continuation decision again. Okay, whether to continue with the uptrend or is it going to change and go back down to this medium-term downtrend. And there is a support line over here in addition to the $72 that provided support back in end of April and beginning of this month. That's the long-term, that's really long-term uptrend support. Why is it long-term? If we go bring this chart, this was where the price surge actually started in April 2025. Okay, so almost 13 months ago. This trajectory or rate of ascent, the price has come down to this band quite a few times already. So that's a possibility, or is actually getting a little bit higher every time it comes back to this zone, which makes sense because this blow off top over here is not sustainable. So the fallback is to go back to when initially April 2025 all the way to December 2025, that kind of trajectory. Okay, that's a little bit more reasonable, even though that still may not be something that can sustain. Of course, if it falls through the $72 key level, then the next support will be this white line over here. This is the ultra long-term trajectory for silver since the 2020 after COVID. Okay, if we draw the center line over here, that's the rate of ascent over a longer period of time. Okay, instead of having these kind of fluctuations. So that currently, if it really drops at this point straight down, okay, that's not the case. But if it does, that's around $56, $57 right over here. But if it travels along this line to get to, July this year, that gets to around 58. Okay. But if this doesn't provide support either, we have to fall back to this range. That's somewhere between $45 all the way to $54, $55. Okay, this is another band similar to gold, where there is much stronger support and closer to probably the industrial or production use case prices. That very early in the days, I made the video explaining or warning, don't get in when silver got to $90 back in the beginning of the year. You can go back to check that video. And how about silver in terms of US M2, right? Here we are seeing that after this little punch above the panic crisis level, it dropped drastically back to the downtrend. So you can call that a fake boo. That's not wrong. What I'm going to do instead is, after seeing this move, we have better reference points. 1, 2, 3, 4, right? So let's adjust the channel. Now, this makes sense, right? So you see, even if it continued to trend down, we see a better rate of descent instead of the original one. Okay, so this is I say more gradual compared to the earlier scenario. However, silver is still hovering around overheated to the panic crisis stage. So if we compare to history, right, previously already shared, back in 2011, 2012, it went to that kind of level, but quickly in like 4 or 5 months, it dropped back to the current level. This time we dropped a little bit earlier as well. And eventually over the course of roughly, from the time it dropped back to this range to the time it dropped to the lower range, it took 19 months, almost 1.5 years. From the overheated level, I'm talking about history here, from the overheated range back to the heated level. That took about 1.5 years. Currently, we're not there yet. This doesn't equate to price, okay? What I'm saying, if you look at this chart, it dropped. But if we look at this, scale is different. They don't think it is like the price dropped that much, is it? But relative to US M2 terms, it dropped quite a lot back to, I would say the zero, the white line, is the norm in history. And then there are levels where the world goes through economic crisis or market correction or system crisis, like in the dot-com bubble as well as COVID. This was the global financial crisis. So there were times when the stock market crashed or the world entered an economic crisis or systematic crisis mode. People or silver prices has gone to those levels against US dollar M2. Next is uranium. Uranium currently against the history, the price levels. Looking at the U.UM, it's a spot physical uranium trust in the TSX. So you can look at what's available in your market, equivalent. The trading activity has basically climbed. You see the volume has been pretty high over the past few years, especially recent months. So with the current Middle East situation and potential new energy crisis, uranium or like nuclear power may be back onto the table. And this, while some people say it looks like a double top and it may come down, which there is a chance. Just in April, May last year, it came back to around the $18 level, the yellow level over here. However, if you look at this trend, it hasn't really dropped through the trend yet with the current drop. It is still a pretty decent climb if I draw this channel box over here and adjust this. The blow-offs, yes, they are not sustainable. They dropped back to the trend, but the trend is still going up. So I'm just going to keep this right over this level only. So what about the daily then? If it is still in an uptrend. So since April 10th, around those dates, this uptrend has been going on. Currently it is retesting the lower boundary or the support line of the air hockey table. Remember, I always say the price bounce as if you were playing this game. So that's what it is. And also, never forget about the center line. This doesn't always cut the channel box in half, doesn't cut the table in half. But what's important is that whenever we see quite a number of these resistance activities or support activities, that's where the line should go. And currently, you can see after testing for about 2 weeks' time, it is bouncing to this point. If nothing particularly shocking come to the market, in terms of news or to the liquidity of investors, these kind of bouncing activities is the base case. But of course, like I said in the beginning, if this is dropping, establishing a downtrend, we always talk about the continuation or change, 2Cs, right? If this is really a downtrend that's been going on, a short-term downtrend that's going to fall through the support, let's say if that happens, then that's the trend we have to observe all the way to the orange key level of $23.42. But if it continues to travel within this wedge, then it's not going to end that soon, right? So let's borrow a date tag and put it over here. The date we're looking at is interestingly also around mid-June. Okay, I copied this tag from silver, and there's a date around that time if silver's price will also continue its uptrend. For uranium, continuing an uptrend by mid-June, both is going to get to a crossroad to tell us continuation or change decision. Continuation means if you're focusing on the short term, continue with the downtrend, okay, breaking the support of the uptrend. But if it's a change of short-term trend, that means it's going to break the resistance of the short-term downtrend and continue with the uptrend, like I said, the base case, okay? So, what about uranium against USM2? If we look at the price over here, over the past 20 years, since 2006, uranium has dropped to a very low level since 2015 all the way to 2023. The current level, I would say, compared to history, is at a reasonable level if we look at the green line over here. Okay? So about reasonable half of it is about this green line. The other half is like below 1. Okay? I marked over here. So some people argue maybe it should be slightly lower. Okay, that still, the range doesn't change. This is still looking at the long-term picture. It's still more or less a reasonable level, okay? Not too low, not crazily high. We never know because these things would change. Like I say, if the energy crisis is going to push nuclear power demand to a new all-time high, then these things may come back and then it drops back again to a reasonable level, but higher than the lows that we have gone through in the past decade. Okay, so this is just to give you a rough idea compared to history. Nobody knows, at least I don't know. I'm not an insider of anything. I'm not a powerful people to get access to, hidden or classified information, so I can't tell. But looking at the pause and looking at the trend, it is still within a historically reasonable level and along an uptrend. How about SPY? It broke above the uptrend ceiling. Okay, that little spikes over here for 3 weeks with a little bit of resistance. Now we see clearly the wick, okay, on the top for this candle and enlarging so people on mobile phones can see clearer. All right, so this wick over here is resistance. The volume has been gradually declining, but the last few days staying at some average level compared to the past year or year and a half. Okay, so it's not too bad. It may not sustain this kind of trajectory, but like I said before, if this is a rocket launch, your fuel is still coming in, staying at a stable level, and they're still cool. Okay, meaning we don't see the fuel tank turning hot, not heating up. Then, this can still go beyond, what people would expect. All right, and then looking at the levels, if we go to the, again, USM2, remember I compared in the past. previous videos that I said last month or even previous all-time high. I said this may not be the end yet, because if we compare to the 2000, the dot-com bubble age, now we're in the AI bubble age, right? Back then, or even now, it's not still at that level. So I won't be surprised if SPY or SPX500 continue to make another all-time high, because we are just not at the same level or haven't reached the same level as dot-com bubble yet. I'm not saying it's a must, but there's still a possibility because history told us it can. Okay? If it has already reached the same level, then that's a different story. We may have to assess it differently, but currently it's telling us that it hasn't. So it is still at the mega bubble level in terms of history, okay? And then whether or not or how long does it take to come back to the overheated level? Back then in the early 2000, 26 years ago, from the first drop, or from setting the all-time high, the month setting the all-time high back in March 2000, the time that it first touched the overheated level, the orange level, it took 7 months, okay? From that white bar to the bar that touched the overheated level. So from this bar that went above for 7 bars, that's going to be end of this year, if that happens in the same way, okay? Interestingly, that's right after the midterm election. Okay, would that happen really at that time frame at the end of the year? I don't know, it's just based on the chart. Finally, but also very important, is TLT. Why is it important? You may argue, hey, everybody is dumping treasuries, but look at the chart. Look at TLT, this crazy volume. The activity has never been higher, okay? You can say, yeah, maybe quite a number of people are selling crazily over that period, but the volume has stabilized and may even be coming down. More important is that even the volume has been that high since second half of 2023, the price has not dropped crazily further. That means while some are crazily selling, some are crazily buying as well. Would that be whales? We don't know. But would retail has that kind of capital to go into the market? Probably not. So while it may not, or it hasn't reached the lowest point, okay, since 2023, or even if you go back to history in the early 2000s, this drop hasn't gone to that point yet. That means the downside room is still there. $80 was the all-time low since 2022, August. Okay? Even though it may come further down, I want to show you the other picture against USM2. Okay, don't get me wrong, it may bounce, but still, the long-term picture is that the TLT against USM2 is in a prolonged downtrend. Okay, very interesting, right? If you look at other charts that I've shown you, gold, silver, uranium, SPX, okay, they are at best flat, not a long-term downtrend like TLT. In this case, over here, if we look at 2023, 22, 23, all the way to September 2028, before the global financial crisis happened, it has been mostly trading along the weaker half of the channel. This is what happened since 2022, okay, when US interest rates climbed to the peak. It drops to the lowest point. Okay, so what if, okay, the interest rate starts to drop? That's when that happened, that spike happened. And when the interest rates stay very low, That's when the time TLT has been trading along the stronger half of the channel. Okay, even though the long-term value against US dollar M2 has been declining. So if US is going to lower interest rates, maybe near the end of the year, who knows, right? It has been dropping for a while already. Currently, because of all sorts of geopolitical reason, it has taken a pause. If it really comes further down, okay, that may be the time that we see a spike for this to come back to test the ceiling of this trend, as well as trade on the stronger half of the channel. Last time, back in 2000, around COVID period, that's when the spike happened that went through the roof, basically. Okay, in terms of price, 2000, okay, that was the peak. And then it started dropping. So while we may not get back to that level because everybody was fleeing to the safe haven back then, well, we may not be back to that point. It also depends on, the trade talks or, the Trump-Xi meeting happening right now in China. Whatever news come out, if they say China is going to buy treasury bills again, long and short term, then that's another story, okay? The market may react. So without knowing what's going to happen, I'm just telling you, TLT, yeah, a lot of activities has been going on. That's true. 2, it has been at almost close to the all-time low. That's also true. But at the same time, it has been stabilizing with these kind of crazy activities. Okay? And also against US M2, remember it is in the long-term down trend, but spikes happen, especially during the time of crisis or interest rate changes. Okay? So guess that's all today in this video. See you in the next one. Thank you. Remember, you can also find me on Substack. Okay, cheers.